And we should be live. So if you are hanging out with me because I do not have a way to hear you, drop me a comment, say good morning, say hi, say whatever you can. I'm Anton Stetner. We're going to talk about the Seattle Metro. We're going to dig through one of my favorite topics, and that is numbers. I like numbers. I like real estate. I love data. And so let's talk about the big things that are really starting to impact us. And what I want to do first is I want to go to interest rates first. We'll start there and then we'll dig through some numbers specifically. So let's hit the magic present button, share screen, boom. Okay. So we're looking at the 10-year treasury right here. Why are we looking at the 10-year treasury? The 10-year treasury is what impacts residential real estate debt. And we know at the latter part of last year, so look, there's the end of 2024, the 10-year treasury was trending down. Then, and this is where interest rates, got down into the low sixes right at the end of 2023. Then we saw interest rates trend up and we almost hit 7% again over here. And then we started getting some positive economic news. And as more positive economic news and inflation starts to come out, and this is that last set of positive economic news. This is heading into the last Fed meeting right here. You can see interest rates have really started to trend down, but they're really picking back up right here. Okay. So interest rates bottomed out at about 6.11. Just let's say that for conversation's sake. And none of these stats are going to be perfect. We're more concerned about what is the overall trend. We're talking about the trend is your friend and what's the overall trend, not what's happening on a specific month or month basis. And if you can hear me out there, drop me a comment, say good morning, and let's chat about what you want to talk about in relation to these numbers. So back to the 10-year. So interest rates got down to about 6.11% on the 30-year fixed. Then all of a sudden they're 6.25, 6.3, this spike right here. Why is this spike happening? This spike right here is specifically happening because of the economic kind of uncertainty that's happening right now. The ILWU, the longshoremen strike that does now look like it's being solved. The Boeing strike, some of the inflation numbers that came out caused this number to really start to kind of spike back up right here at the end. Now, the thing I want to say is I believe this is temporary. Okay. So normally bonds are not this volatile. It doesn't make mortgage rates this volatile, which means that this should come down and this should continue in a downward direction. Hey, good morning, Dana. I see you. Thank you for saying good morning and hitting me in the chat. If there's something that you want to hear about, let me know. We'll go there for you specifically. And we know that the Federal Reserve just came out and they said, we're going to cut rates more. So Jerome Powell was just out in the last week and said that, based on the data, expect more rate cuts this year. Now, is that 25 basis points? Don't know. Is it 50 basis points? Don't know. But I will bet we're probably going to see an additional 50 basis points by the end of the year. So what's that mean for us in residential real estate? That means 30-year fixed debt by the end of the year, and definitely going into the spring, will most likely be in the upper fives. The stat I really want you thinking about is as rates go down, demand increases. And we're already seeing this both in the Seattle metro, which we're going to dig through the stats, and throughout the US. So if you go to Altos Research or the Redfin Data Center, what you can see in both of them is you can see the pendings are picking up right now when traditionally, from a seasonal perspective, pendings usually trend down at this time of the year. So that's what's happening with 30-year debt. I think this is a blip. I think this is the market responding to the stress. And then I think 30-year debt's going to then just continue in a downward direction. But, and this is a big but, I don't believe that 30-year debt is going to necessarily fall as fast as everyone wants it to. And it doesn't fall in a linear fashion. See, as consumers and as real estate agents, as real estate investors, wherever you are, we have this thing of recency bias where we basically just whatever happened over the last few years, we assume we're naturally going back to that. So we assume we're going naturally back to low interest rates. I do believe we're going to go towards lower rates, but don't expect them to happen immediately and expect it to take longer than you want. If you're not subscribed to my YouTube channel, if you can hit the subscribe button and then share this with someone else, that will always help us. Now I want to go into the specific stats, and as people have questions about a specific uh, um, market or a specific area, let me know and we'll dig into that. Okay, so we're just going into good old MLS here. And I like to look at this on a monthly. I like to look at this on a monthly basis right here on the tabs. I got to make that bigger for you guys. There we go. I like to look at this on the monthly data because then we're looking at the actual data. This was in 2022 when we saw that peak. This is the whole NWMLS. I'm going to go into King County here in a second, but this is what's happening across the whole state. We saw that peak in 2022. You see the seasonality that kind of naturally happens. And you can see that most of the state is approaching its peak pricing that we had in 2022. So let's go into King County specifically. King County is the largest county in our state. Let's try it again. There we go. So when we go in and look at King County, this is the median price. And of course, we'll look at the average right after this, but they basically look about the same. The median is the middle of the road. Okay. And this right here is when the Federal Reserve started raising interest rates. And you can see that the market, King County, the median price peaked out at 876,000. The average price peaked out at 1.1 million. The median is the middle, averages add them all together. Then we go through, the crazy raising of the interest rates, the market stabilizes. We start the beginning of 2023, then we trend down again. Rates get really low, boom, we got a spike. It's like the market right here in the beginning of 2024 started to understand and agree with, oh, we can deal with these higher rates. The market in median price peaked in May at 880, and then in September was 865. Let's look at the average real quick too. So the average peaked in July at 1.14 million, and today is sitting at about 1.1. So what's interesting is your average price is over in July of where it was in 2022, and the median price at 880 and at 865 was slightly over. So most of King most of King County has already recovered its pricing that it lost from the interest rate hikes. So I want you to be thinking about as rates come down when we're looking at these prices in King County, do you expect prices to go up slower or faster? And just feel free to type that into the chat if you think prices are going to go up slower or faster in 2025. Now let's go look at the new listings. Okay, new listings for King County slightly up over last year. Okay. Homes for sale. Homes for sale trending in an upward direction. The thing to be understanding is as this is trending in an upward direction, this means more competition, even with cheaper debt. Pending home sales slightly up, okay, but not up relative to 2022 or 2021. And let's look at this over a 5-year run, and definitely not where it was back in the peak of 21. Let's go to days on market. And I don't like the median. Let's look at the average. Let's just go over the last year. So you can see days on market is also rising. Well, why is days on market rising? It's taking longer to sell homes in King County because there's more new listings and there's more homes for sale. Makes total sense. Months of supply of pending. So the supply of homes is still growing. It's up 26.1%. That's significant. That's definitely up. Percent of original list price. Let's look at that one. So the thing to understand when someone says to you, I want to get a deal. I want to get a deal quite often is a function of market timing. And you can see this right here in this graph. Heading into that spring market in February in King County, you're at 100% of original list price. That means they're selling for exactly what they go on the market for. It peaks in April at 102, which means the average property was selling for 2% more. Then the seasonality kicks in, but we're still at 98.3%. This stat is going to show up in Snohomish County, Skagit County, Pierce County, exactly the same. When a buyer or a seller or an investor says that they want to get 5% off the list price or whatever percent it is off of the list price, you need to go and look at this in the specific city that they're looking at or in the neighborhood because you can define these stats on a neighborhood specific level. And you can show them that the average buyer was only getting 1.7% off. So if they've got $1 million property that they're looking at and they want to pay 900, that would be approximately 10% off. Statistically, it's not going to happen. Well, what would cause that to happen? Some sort of massive level of motivation would have to be there. And to be honest, you'd probably have to get that one off of the market and not on the market. Let's look at showings to go pending. Okay. So rising. So it takes about 15 showings. But what's the average listing getting? They're only getting 6. So another thing to be thinking about as an investor, if you're selling your properties or having these conversations with sellers as the listing broker, if you only got 6 showings, the market is essentially rejecting your price condition and your marketing. However, conversely, if you received like 15 showings and you received no offers, because that's the average amount, the market is once again rejecting those exact same items. So you have to get in the market to obtain enough sales. And if you're not, the market rejects you. And if you, excuse me, I meant to say showings in order to get the sale. And if you get a bunch of showings and no sale, the market is still rejecting you based on the same premise. All right, let's go look at Snohomish County. And what I want you to do that out there is if you're listening and there's a specific city or a county that you want to look at, let's go look at that for you. Okay. Snohomish County. Let's go back and look at it over 3 years. So we talked about, how the median price peaked approximately 775. The average was 848,000. So Snohomish County is not quite back. It's not quite back to its full peak. So we have a property that we're selling in Bothell, in the Snohomish County part of Bothell. He did purchase it in 2022, and he is underwater. Unfortunately, that one is going to turn into a short sale because that individual is underwater. And you can see this right here in these stats that we're not back to the peak pricing yet. In June, we hit 828, and now we're down to 810. Now, when people see this, a mistake that real estate brokers make is they say prices must be massively dropping. That little decline that you just saw is the seasonality, it is the lower demand. And yes, prices are dropping slightly, but that's normal. So, what I want you thinking about in any of these cities or counties is if I'm looking at my comparables and my comparables are 60 days old. Well, we're in October, so that's September, August. Okay, that's a little bit slower. But if my comparable is all the way back in June, realize that I've got to discount that price today just slightly to be comparable. So I have to price more aggressive during the winter. I just put on one of my own personal properties. It is a split level that we built. And because the debt was so high on it, we had a negative cash flow situation, but we had quite a bit of equity. So we put it on at 725. The comps said 715. So I knew I was overpricing it. I had it on the market for 10 days. In 10 days, I received 3 showings. So let's look at the showings in Snohomish County real quick. So we've got these exact numbers in front of us. So the showings to go pending is 13, and the showings per listing is 5.7. So I immediately knew, based on that data, that in 11 days, because I had only received 3 showings, that the market was rejecting my price, my condition, or my marketing. Well, I do a lot of marketing, so I knew it wasn't the marketing. 2, the home's 1 year old. We built it. Beautiful giant split level, giant windows inside of it, LVP, quartz, very nice home. And we went through after it was rented for 1 year and, did all the touch up paint and made it look beautiful and perfect. Therefore, we know it wasn't conditioned. Therefore, it had to be priced. So I dropped it to 700,000 and I immediately sold it within 2 days. Why? Because the comps I was looking at were from the late spring and early summer when the market was hotter. Therefore, I had to discount just slightly, but I got a phenomenal offer. I got a 25% down offer, 3-day inspection, and they wanted to close early. We're then doing a 1031. I'm picking up a sub 2 property and I'm picking up another land development project. And then I'm going to take some of the cash and pay some of the gain. But based on these stats, we were able to make that judgment call. So what's happening to new listings? New listings is up 14%, a little bit less than King County. Interesting. Homes for sale up 20%, a little bit less than King County. Pending sales up 21%, a little bit less than King County. So the thing to be thinking about these real estate statistics as you are looking at them is Seattle and Bellevue are like the 2 centers of our real estate universe. The closer you get to Seattle or Bellevue, the hotter the market is in real estate. And then every ring out from there, it cools down just a little bit more. So always be aware that Maple Valley, for example, is going to move much slower than Kirkland. Okay. And of course, they're operating at a much different average price. If you're just joining us and you want to go through a specific stat in a specific city, just drop it right there into the chat. Say, hey, let's look at this. We could even look at an MLS number for you or a neighborhood. Let's look at closed sales. Closed sales is up just slightly. Days on market also trending up, but this is more of a function of seasonality. 25 days is still not that bad, still a very good market. What's interesting is King County is showing more inventory than Snohomish County. So Snohomish County is sitting at 2.1 months of supply. Let's go to percent of original list price because I love this. So same thing. You see us coming into that spring market. You see us peaking out at 101.8 and then basically sitting at 98.1 right now. So the average buyer in Snohomish County in September got 1.9% off of the list price. Another way to think about that, because it's hard for buyers to understand what we just said. So that's 810,000. So I'm going to open my calculator. Put that right there. And let's see if I can then share this one as a tab. Boom, present, share screen, window, calculator, share. Oh, there we go. So we know that it was 810,000, $810,062. And we know the average buyer got 1.8% off. So times 0.018. So part of this discussion I want you to be having is the average person got $14,581 off of the average property in Snohomish County. So you have to look at this from two sides. One, you should be negotiating and getting that. Two, if you're a better agent, better investor, you should be getting more than that and bringing that number up. Three, if you're representing a buyer and they want to get 30, 40 grand off the price, statistically, that's impossible. Okay. Unless we have extenuating circumstance or some level of very high motivation. Okay. So we'll stop presenting. I'm going to present that other tab again. Talked about the showings to pending rising just slightly. And so what does this mean? What does this data mean? And I will go through any city, any county you guys want me to go through. Just drop it in the chat, or if there's an MLS number you want us to look at, I'm happy to. But what this data means is this data means that the level of activity is slightly down. The level of homes for sale is slightly up. We need to be pricing our properties slightly less than the hottest part of the market that we just went through. And that right now is your deal season. It's your deal season for multiple reasons. And I want to go through this just so we can make sure to articulate them. One, the natural seasonality that exists towards the latter part of the year is happening right now. I just showed you in the data how during the winter is the best time to buy real estate. On a certain level, you should say, duh, because we live in Washington State and it's rainy. Armand, I will get there for you in a second, brother. As long as you get back on to your diet. Yes, I just called you out. Two, we have FUD. What is FUD? Fear, uncertainty, doubt. Why do we have FUD? Inflation is not all the way beat. Two, presidential election. It doesn't matter who people are voting for. It doesn't matter if you're Republican, Democrat, Independent, the pink fluffy unicorn party. The uncertainty causes the average consumer to put less activities in. So, what that means for me, what that means for you is it's deal season. We are making offers right now. When I'm done with this live, I'm going to go look at another property we just put under contract in Everett, where we're going to go build multiple dadus on it. And the lot is so big that I'm probably going to be able to build Rambler dadus on it, 2 of them. How many Ramblers are being built in Everett right now? Based on the data that we're looking at and what I'm seeing in the market, that'll be one of the most desirable products for us to sell. So we can use this data to help us make more money. 3, the other thing that's really fuddy's not a word, but you get the idea, is all of these wars and these conflicts and the fact that they're escalating. I really hope and pray that cooler heads will prevail and that the politicians and these governments can get this under control. Because for the first time in my life, I actually feel like we're closer to World War III than we've ever been. And the problem is everyone has massive nuclear weapons right now. I don't want to go on a rant. What that worries me. Pray about it. Pray people have wisdom. So those 3 things though are the big ones. And we've also been seeing uh jobs. Yes, I get it. The last report beat to the upside, but in a general overall trend. See, I believe the trend is your friend. The unemployment rate is rising. The amount of job openings is falling. And there are people looking for jobs today who are not necessarily getting the job they want. So the economy is slowing down right in front of our eyes. All right, Armand. Armand, my man. He wants to look at Graham. Let's go look at Graham. Boom. Graham. There we go. Okay, it's up on the screen. Let's rock and roll. Same thing happened July. Approximately 651. We saw the peak in 2022 and the average price. The median, interesting, January, but let's call this, you know, something is crazy with the data there. I feel like July was more like the peak, 565. And then look, woo, interesting. The median is back above where it was, but the average is not. Super interesting. Okay, well, look, is the market speeding up or slowing down? New listings. Saw a little spike up, but man, I would say new listings is trending in a downward direction. So this is pro seller, okay? Pro investor. Homes for sale. Homes for sale up significantly. So that's definitely up more than the rest of King County. That's not pro seller. That's not pro investor. That's pro buyer. This is why when you're looking at data and you're looking at numbers, 1, never trust the media. 2, never trust politicians, because what they do is they pick a number and they go for your emotion. But what we're doing here and what we're showing you how to do and what I want all of you to learn to do, my friends, my investors, my agents, go look at multiple pieces of the data, because it takes 3 to 5 pieces of data to confirm the whole story. So never take just one. I want you to dig down below the surface, because I'm telling you, this is looking a little more like a buyer's market right there. Okay, pending sales. Ooh, down. Second confirmation of a buyer's market. Closed sales trending down. Third confirmation of a buyer's market. And once again, if there's something you want me to go through for you, let's go through it. And if you haven't subscribed, hit the subscribe button. Share this with someone else. I'm doing this for you guys, but I'm also doing this to grow our YouTube channel. Days on market, average about 37. Honestly, you'd say that's kind of about flat. Let's look at the median. Median coming up just a little bit. Let's smooth the data. So if you go into the 3 months or the 6 months, all it does is really smooth it out. Yeah, I mean, it got really hot for the spring, but then kind of went back to normal. Month supply of pending, pretty flat, 3 months. Still a seller's market, but heading towards that buyer's market. Percent of original list price, 98.4 last month. It did get as low in July as 96.8. So one thing to think about is even though it was the summer months, for some reason, Graham was experiencing a slight slowdown. Don't know exactly why, but that's what the data is showing us. Okay, shows to go pending, 13. Showings per listing, 4. Armand, do you have a specific question on a buy side or a list side, and did I cover everything for you? Also, everyone else, let me know if you want me to go through something specific for you. I'm going to bring up Skagit real quick and just go through Skagit County. Sales price. So interesting. What's interesting, because Skagit County is not the heart of the metro, right? And because it's not the heart of the metro, it didn't move as much. So you see this, and you kind of see that regular 2022 peak, but you saw the real hot spring market, and then it kind of cool off again. Armand, you covered everything in the new listing with the deep dive. Thank you. That helped. No, thank you, brother. I super always appreciate you just getting involved and being a part of stuff. New listings. Okay. Trending down the seasonality. It did. New listings in the spring, though, did get over where they were last year. Homes for sale. Definitely up where they were in 2023. Pending sales. Wow, quite a bit higher. And it's interesting. So everyone thinks that when inventory and listings rise, that prices have to fall. What Skagit County just showed you was that prices went up and they just simply sold more homes. This is really true for the whole Seattle metro. We're so far behind on housing right here. What's actually happening is the demand is so high that if the listing inventory rises, the market just eats it up. And as rates continue to trend down, because we were talking about this with the 10-year treasury, expect that demand to heat up. Expect that above average appreciation next year. So 2025 through the whole metro should appreciate more than 2024. Closed sales slightly up, which is showing because there was more homes on the market, so more things were able to sell. Percent of original list price. Super interesting. So look at that. In the peak of the spring market, 99. It does not get it didn't get as hot as the rest of the market because it's further out. So as an investor, I'm a hardcore investor, so I always want you to think about these things. There are times when you maybe just want to avoid Seattle, avoid Bellevue. You want to go a little bit further out because you're going to get a better deal. The data is showing it right in front of our eyes. Okay, get off my high horse a little bit. September, 95.7. I mean, so someone says, I want a deal. Go to Skagit County. I mean, the average person got 4.3% off. Well, 4.3% off of almost 600 grand. Let's just call it 600 just to make the math simple. 4 times 6, that's $24,000. So you had a lower price, and the average person was getting 24K off of the list price. So if you're an investor and you're a buyer, where was the deal? Skagit County. Actually, let's look at Pierce real quick too, because I want to see if this thesis also played out going into Pierce County. Okay. Pierce, same thing. Okay. We peaked July 2022, 614,000. Oh, we passed it in August. Pierce beat it at 617, basically 618. And now at 597 on the median, didn't quite beat it. New listings, okay, slightly over, okay, and trending down with its normal seasonality. Homes for sale, definitely a lot more homes for sale. Pending sales up quite well relative to the latter part of last year. When you see that latter part of last year and you're a real estate broker, I need you to realize that there's a lot of brokers I've been talking to, and today they're feeling discouraged. I want to tell you, if you're in the game, in the arena right now, you are going to sell more homes this winter than you did last winter. It shows us right there in the data. But if you're not in the game and you're just sitting at home on the couch, it's time for you to leave our industry. Okay. I only want the professionals. And so, for my professionals that are listening, I want you to get on your surfboard. I want you to paddle out into those waves and go take your unfair share of the market. You know what? I got to keep going on this. Yes, I get it. There's fear because of the election. What's going to happen right after the election? Right after the election, everyone's going to jump back into the market because the fear, uncertainty, and doubt is now missing. So expect a good December. Expect a good January. I'm preparing for that now. See, I've received multiple requests. Hey, come have this meeting. Come have this coffee. Let's hang out. I love all of you, and I totally want to hang out, but I'm on a workathon right now. And I'm on a workathon for multiple reasons. It's deal season, and I can see the number of transactions rising. So I've paddled out into the deep water. I went through the waves. I'm waiting for the big waves to come in so we can ride them and grab that momentum. Send me a DM if you don't understand what I'm talking about, and we'll talk about this offline. Closed sales slightly up. Days on market slightly up. Months of supply of pending trending down. Percent of original list price 97. So this just goes to prove the data case once again. Seattle, Bellevue, two hottest parts of our real estate market. The further we go out, we just looked at Skagit County and we just looked at Pierce County. Pierce County last month was 97%. And in Skagit County was 96.3 or 95. No, it was 95.3. So the average person got, almost 5% off in Skagit County and almost 3% off in Pierce County. Conversely, in both Snohomish and King, they didn't even get to. So if you're hunting for a deal, the further you get out from the layers of the onion, the better the deals are. In closing, and while I have you guys on, does anyone have any specific data or an MLS listing or a question that they want answered? Feel free to type it in the chat. In summary, though, yes, I get it that the 10-year Treasury popped up right now. I do believe rates will continue to trend down and that the Federal Reserve is going to cut rates because the economy is slowing. I am not worried about real estate at all. Why? Because we already went through our recession. We went through a transaction-based recession, not a price recession. So I'm going to show you I'm going to go back. I'm going to show you what I mean when I say a transaction-based recession, because people, they don't get this. So I'm going into the whole MLS. So the whole MLS is covering like 80% of the state. Let's share the screen with you. We're looking at the median price. Same thing for the entire MLS. We see the peak in 2022. The Federal Reserve raises rates. We see the drop. We see it recover. But what happened to closed sales? So closed sales for the entire NWMLS peaked at 12,605 for the month of June in 2021. Then we come down, but let's max this bad boy out. Let's look at closed sales over a longer period of time. So when you're looking at this graph, you go, hey, Anton, come on, buddy. This looks like a heartbeat. This isn't telling me anything. I'm going to tell you what this is telling you. I'm also going to tell you this is why prices aren't going to drop. This is one of the reasons. Right here, that's 7,500. That's 7,700. That's 23. That's 24. Well, let's go back and say at what level, what year? Well, in August of 2012, wait a second. Coming out of the Great Recession, we sold more homes. So we only sold less homes in 2011, 2010, 2009, 2008. So right now, today, we're selling homes in Washington State, in the Seattle metro, at the same levels we were coming out of the Great Recession. What happened in 2012 to prices? Well, let's go look. We can look at the data. So when people on my Instagram, on my TikTok, on YouTube tell me prices are too high, they have to crash, that's an emotional response not based in logic. We just recorded a video for 49 minutes on this YouTube channel about why prices are not crashing. And we go through all the different reasons. So let's look at sales price. Oh, wait a second. Where are these price declines to happen? There's July 2007. Okay. Oh, in 2012, they bottom and then prices start going up from there. Well, wait a second. Let's go to closed sales again so we're on the same page. Here's 2012 for closed sales, and then closed sales continue up and prices continue up from there. This is just another function of history repeating itself. The other reason prices are not dropping throughout the Seattle metro and also most of the United States is we are just simply so far behind on housing. So most estimates agree that we're about 1.5 to 1.8 million units behind. Zillow says we're 4.5 million units behind. And I'm a builder developer. I build here in the Seattle metro, mostly in the north end. I can tell you how unbelievably hard and difficult it is for us to get permits, land development done, and to make it happen. I just got a land development, a short plat approved. That's 17 lots in rural Snohomish County that I've been working on for 4 years. Now, because it's winter, we can't start. So I have to wait till the spring. Then in the spring, I then get to go clear everything, put the water line in, put the roads in, put in all the utilities to then be able to build the homes maybe by the fall. So if we start in the fall, they won't come out of the ground and be totally finished then until 2026. So that means I will have been working on this development project for 6 years. Now, this is a special one that's taken a little bit longer, but they do take an average of about 3 years, 3.5 years. So we're not going to just magically catch up. So where am I investing? Right here in the Seattle metro. I sold our out of state stuff. We brought it all home because I believe our backyard is going to have the best appreciation based on the data we just went through. We're going to have the most opportunity. We're not going to have the best cash flow, but the best long-term opportunity. I'm Anton Stetner. You can reach me at resg.com. Send me a DM, subscribe, and drop any comments if you guys have anything on this one. I thank you for hanging out and going through one of my favorite things, what's happening in the market, in the data. Bless you all. Enjoy the rain. Bye.